Welcome back to the channel. Fast video on global resource GL1 global lithium resources. Bring out scoping study. So basically says they're going to make 200,000 tons per year of lithium. Sell it at probably $2,000 profits. Make $500 million per year before tax and costs. It's going to cost them quite a bit to build the mine, $450 million. So quite a bit more than what CXO costs. They cost under $100 million. Was that USD or ASD? Where are we? That's Australian. So yeah, remember to look at the Australian, or is it US? And then the tons, the sale price is USD. So they're expecting $2,500 sale price, but latest sales have been $5,500 average Pilbara Minerals. GL1's costs, everything's gone up the last few years, as you probably know. Their cost $688, and Pilbara Minerals about $100 cheaper. Obviously, they've been streamlining more, so they can get there. Once they get going, they can cut costs down. Just like we've seen with iron ore producers, they used to do $50 a ton. Now they're doing $15 a ton. So there's always, if there's room for improvements, make savings, guess what? They're going to do it. So if I didn't already say basic figures, build the mine, $400 million. I'll go to my silly notes here. So you can buy the whole company right now, $500 million. Then you need to spend another $500 million. Then you make $400 million a year. It's actually $500 million a year for 10 years, but that's before tax. So after tax, maybe it's $250 million in the hands for 10 years. So this really dumbed that down. Doesn't look super cheap at that price, but it's still decent. Like, if you need to look at these things to more understand it from my point of view. So you can buy this company for $50, build it for $50, and then you get $50 a year for 10 years at the end of the project, or $250 after 10 years. So it doesn't look really like, wow, I'm going to make heaps of money. It just looks average, in my opinion. Though that's with the $250,000, sorry, that's with that lithium price that they expect, and the current one is this much. So it could be double that. So it could be $500 at the end of 10 years. And that's me, you're not worrying about. Yeah, it's decent. So how much more would you pay than the $50 that they're currently selling for now? You might pay double that. You might pay $100. Take in mind, they can up this. So there's upside in that is higher lithium prices, which are actually higher right now. And 10-year mine life. It's been like a few years of drilling. I mean, another year or two of drilling, they could do a 20-year mine life, and then they can up the tonnage per year, as seen with Pilbara Minerals, who's going to go, I think, 1 million tons per year. So they did 162,000 in a quarter. GL1 expects to do 200,000 in the whole year, or 220,000. So they can dig more tons and then upgrade as well, although at more costs, depending on what the market demands. If the market's going to pay for that lithium, without a doubt, then GL1 can upgrade, meaning the price tag is cheaper than it is now. Though in my opinion, even as a holder of this company, not rushing out to buy it at this price. Much better returns, especially if we get high interest rates now. People are coming onto those, spending less, and guess what? When they spend less, then people make less, and then they all spend less as well. So it's like a circle, which means we're probably going downhill a bit. In my opinion, who knows? So what I was going to say is, yeah, so not rushing out to buy at this price. Pretty well valued, fair value. I see better buys in the. Take in mind, I did buy GL1 at $50 million. Anyway, these companies could be the next one. Natural graphite. So there's a shortfall of lithium now. That's why you can get it out of the ground for this much and sell it for this much and do this many tons per quarter of the year if you're a big player. This is the best example, obviously. But then we have natural graphite, who's yet to take off, yet to go in shortfall. So you can buy a small company that can do big tons in the future when needed at a low price of under $50 million, which I suspect, if graphite is the anode of choice, if we go in shortfall in 2025, 2026, this company will probably be worth $200 million, just a rough figure throwing out there. And they get a low capex because they're in a good place. So that's the thing with GL1. If they had a lower capex, might be a bit better. But they are in here, so building costs a lot more. Has to get shipped to here to go to China, where CXO was, I'm not sure where Darwin is. They had a really low capex because they were near the city. If you're right here near Perth, you're gonna have a low capex, but the further out you are for a main city, the larger the capex goes. So GL1, still not going to sell them, just hold up. They will go to probably $2 billion, I suspect. But how much share price return, I'm not sure. That'll be market cap will go to 2 billion. Not really sure. Actually, 2 billion seems a bit much, but at least a bit more than it is now. Anyway, they have to raise that money. And yes, quite a bad video, but that's what you get. And see you in the next one.